Welcome to After the Bell, the Capitalists versus Consumers Daily Market Report. Here is everything that moved the market today, Thursday, May 28, 2026. New records for the S&P 500 and Nasdaq. Hot PCE inflation. A revised lower GDP. Snowflake momentum carrying into today. Zscaler crashed 30%. And another Iran headline moving oil. Let's get into it. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. The numbers at the close. Today was a strong session despite challenging inflation data. The S&P 500 gained 0.58% closing at a new record of 7,563. The Nasdaq Composite rose 0.91% to 26,917. Another fresh all-time high. The Dow Jones Industrial Average was essentially flat, up just 0.05% to 50,668. Tech stocks led the rally powered by Snowflake's extraordinary after-hours earnings last night and continued Iran ceasefire optimism. As the NYSE's senior market strategist described it, today is a replay of yesterday just in reverse. Yesterday, the market rallied on an Iran state media report of a draft peace deal. Then the White House called it a complete fabrication, and oil bounced back. Today, new Iran ceasefire extension news drove another leg higher. The fog of uncertainty around this conflict continues to generate daily volatility, but the overall direction of the market remains upward. PCE inflation. The Fed's preferred measure. This morning, the Bureau of Economic Analysis released the April Personal Consumption Expenditures Price Index, the Federal Reserve's preferred inflation measure. The number came in at 3.8% annually, the highest in nearly 3 years, and matching the CPI reading from 2 weeks ago. Stocks opened lower on the data, then rallied strongly through the session anyway, driven by Iran optimism and tech momentum. The market's ability to shrug off hot inflation data and hit new records tells you something important about investor psychology right now. The AI earnings foundation is powerful enough to override the inflation concern, at least in the short term. First quarter GDP was also revised lower today, from 1.9% to 1.6%. That revision reflects downward adjustments to both investment and consumer spending. The economy is still growing, but more slowly than initially estimated. Initial jobless claims came in at 215,000 last week, remaining contained and consistent with a healthy labor market. Snowflake carries the momentum. Last night's 25% after-hours surge in Snowflake set the tone for today's tech rally. The company's announcement that Amazon Web Services is committing $6 billion to use Amazon's new Graviton AI chips validated the broader AI infrastructure spending story, and that enthusiasm carried across the entire technology sector today. The AI trade that NVIDIA validated last week is now being further confirmed by enterprise software companies, showing that AI tools are generating real commercial demand. Snowflake's 33% revenue growth and AWS's $6 billion commitment are exactly the kind of data points that keep institutional investors committed to AI exposure. Zscaler crashes 30%. The biggest single stock story today on the negative side was Zscaler, a cybersecurity cloud company, which crashed approximately 30% after reporting earnings. The company beat on revenue and earnings, but issued guidance that disappointed investors. Zscaler's collapse dragged down the entire cybersecurity sector. This is the same pattern we have seen repeatedly this earnings season. Beat on the current quarter, punished for anything less than extraordinary guidance. At current valuations, the market has no tolerance for deceleration. Zscaler's crash pulled down names like CrowdStrike, Palo Alto Networks, and Okta, none of which reported anything negative today. The guilt by association selling in cybersecurity names today was driven entirely by Zscaler's guidance miss. The Iran situation. Ceasefire extended. Today's positive Iran headline, US and Iranian negotiators reportedly agreed to extend the ceasefire. That news pushed oil lower and equities higher through the afternoon session. Oil fell further from yesterday's levels. Here is the critical context from the NYSE's market strategist. Yesterday, we saw the latest example of the fog of uncertainty that surrounds this conflict when Iran state media said they obtained a draft memorandum of understanding, followed by the White House saying it was a complete fabrication. Oil moved lower on the initial headline, and despite the rebuttal, never fully bounced back. The pattern is becoming clear. Each Iran headline, real or false, sends oil lower. And even when the White House rebuts the report, oil does not fully recover. The market is gradually pricing in a higher probability of eventual resolution. That is a slow-moving positive catalyst for inflation and rates. Salesforce falls after hours. Salesforce fell after hours last night following light guidance for fiscal 2026, and that weakness continued today. The stock has now given back significant ground. The enterprise software landscape is bifurcating. Companies showing strong AI-driven demand growth like Snowflake are being rewarded handsomely. Companies showing any softness in guidance are being punished hard regardless of their current quarter results. What to watch tomorrow? Tomorrow is Friday, which means our full weekly breakdown here at Capitalists versus Consumers. This has been an extraordinary week. Micron crossing 1 trillion, oil crashing on Iran hopes, Snowflake's blowout quarter, PCE inflation at 3.8%, GDP revised lower, and the SpaceX IPO roadshow developing. Also watch for any Iran deal developments over the weekend. The ceasefire extension is positive, but a formal peace deal has not been announced. Any official confirmation over the weekend opens markets dramatically higher. Monday. The bottom line. Today, the market did something remarkable. It received the hottest PCE inflation reading in nearly 3 years, a downward GDP revision, and a 30% crash in Zscaler, and still hit new records. That resilience reflects the extraordinary strength of the AI earnings foundation and the growing belief that the Iran situation is moving toward resolution. For long-term investors, stay the course. The fundamentals driving this market remain strong. For people carrying variable rate debt, PCE at 3.8% keeps the Fed on hold or hiking. Accelerate your payoff plan while rates are still uncertain. Tune in tomorrow for the full weekly breakdown. That is your After the Bell for Thursday, May 28, 2026, here at Capitalists versus Consumers. Please hit the like button and subscribe. Turn on notifications so you never miss our daily report or weekly breakdown every Friday after the close. We will see you tomorrow. Affiliate links. Small commission at no cost to you. Educational purposes only, not financial advice.